Hi everybody, welcome to the Attract Capital webinar for this month. My name is Janine. I'm here with David Barnett, who's the CEO of Attract Capital. We just wanted to wish you all a Happy New Year before we begin. Thank you so much for sitting with us, watching with us, and being a part of this, because it definitely helps widen the community that's a part of Attract Capital. So thank you very much.
Very much, Janine. In fact, as I told you earlier, we're getting a lot of positive feedback from people that watch these webinars and questions. So keep coming with the questions. We're happy to answer them.
Yes. So today we're going to be talking about top acquisition financing trends in 2019. So we obviously, 2018, we had a lot of different things happening. So let's take a look back at 2018, and can you tell us a little bit more about how it was for mergers and acquisitions?
Absolutely, Janine. So 2018 was a huge year for mergers and acquisitions. In fact, it was the second biggest year of all time. And if you look at the numbers, it was like $2.7 trillion of M&A activity. It's the biggest year since 2006. And so it was a really big year, and a lot of the experts are saying we're going to have another big year in 2019 as well.
That's great. So things are looking up for 2019. And do you feel like with that there's a lot of cash in the market right now? What would you say?
Great question, Janine. There's a lot of liquidity in the market. There's a huge cash overhang. The private equity funds are holding collectively about $1.3 trillion in assets, and the private debt funds are holding just under $1 billion in total assets under management. So there's a lot of cash on the sidelines. There's a lot of money waiting to fund M&A activity.
Oh, that's exciting. And so with cash in the market, I'm guessing there'd be a lot of deal makers out there. And do you feel like their confidence levels are a lot higher?
So there's a lot of bullishness, Janine. That's a great point. So a lot of these, the deal-making community has been very strong for the last several years. And because we've had several years of good economic growth, a lot of the deal makers have very high confidence. Deloitte did a survey in late 2018, and they uncovered the highest level of deal maker optimism over the last 3 years. So I think what you have is you have a good economy, and people are feeling really good about the future, and so they want to do deals. So it's a good time for a seller, and it's also a good time for a buyer.
That's great all around. So do you feel then that 2019, it seems, is also going to be strong, like you said, for mergers and acquisitions?
Absolutely, and it's particularly strong for middle market deals. You may not have the big mega deals, but you're going to have the middle market deals, which is the sector that Attract Capital plays in. But I think what you really have is you have a lot of big companies are doing better because of the changes in the tax code, and so they have more cash. And you've got a lot of banks that are looking to be bullish, and there's lots of people that are looking to put money out. So I think it's going to be a very bullish year.
Great. So for 2019, what are some trends that you might be seeing with this activity being so strong for mergers and acquisitions? What are some tips, trends you can give us?
Sure. So very excellent point, and we're taking it sequentially here. So I'd say that you're going to see a lot of competition for deals. There's so much money, and there's only so many good deals. So if you have a deal, you're going to be competing. You're going to be competing with private equity firms. You're going to be competing with corporate buyers. You're going to be competing with independent buyers, with fundless sponsors. So there's going to be a lot of competition for good deals. That's sort of the first trend that we see, the level of competitiveness. The second trend that we see is that there's an abundance of financing out there. More capital, probably in the history of the private capital markets, is available right now, particularly given the growth in the private debt funds and the aggressiveness of the banks. Banks, because they've been somewhat deregulated, are being more bullish about the types of loans that they want to do. So you've got all this money in the private debt funds, you've got all this money in private equity funds, and the banks are being more aggressive. So you have an abundance of financing options. So you have more competition, abundance of financing options. So it's easier to raise the financing, but on the other hand, it's harder to get the type of loan that works best for you. So while you might have more people that want to give you money, it's harder to figure out, well, this loan structure is better for me. And it's also harder to figure out who are the lending groups that are best to work with. Because a lot of the buyers, a lot of people that are doing an M&A, Janine, it's a long-term type situation when you buy a company. It's like a 5 to 10 year relationship. They want to deal with a lender who's reliable and who's going to be dedicated to helping them over the long term. So while there's a lot more money available, it's harder to find the deal that works for you, and it's also not easy to find the best lender that is interested in that relationship approach. I'd say that, back to a point we made earlier, banks and private debt funds are really flush. They're leading the way. And I think within the banking community, you have a lot of community banks and regional banks that are really making inroads into some of the larger money center banks because there's been a lighter regulatory touch with some of the smaller banks. So I'd say you've got more money, more competition, harder to find the right structure for your deal, perhaps harder to find the right lending relationship. You've got banks and private debt funds leading the way. And I think the final point that we see that's interesting in a lot of these transactions is that because the economy's strong, a lot of buyers are going to the seller and saying, you don't need to get all your cash out up front. You can roll some of that over and take some of the equity because we're really going to grow the company after we buy it. So there's an ability to get seller equity or a seller note in the deal, which is better for the buyer. So I think it really comes down to there's an abundance of financing options, and there's more ways than ever to try to get your deal funded, but it's harder to pick the right match. And that's what we see in 2019 in terms of the acquisition financing trends. I think it's a great market. I think there's going to be as many deals, if not more, but I think it might take people a little bit longer to sift through all the different options that are available to them.
Options are always a good thing. So it sounds like 2019 is going to be pretty bright for all of you out there. So with all of that, that's what we have for today.
Absolutely. So everybody, have a great start to 2019 and good luck with all your great deals that are going on out there.
Yes, thank you very much.